The traditional markets have opened up red. The DXY is on the rise and Bitcoin has fallen out of its 2-week-long rising channel formation. This week is going to be a big week for the market, so CPI and FOMC on the horizon. Can Bitcoin withstand the brunt of these news events, or will it fall to new lows? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning into today's video. Hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today, focusing on two particular things. The first one being what is happening at the price action here, what does this breakdown mean, and where can the price go? Number two being the macro environment in relation to the potential CPI and FOMC data that will be coming out in a few days. So without further ado, let's go ahead and dive into today's video. Remember to smash the like button, subscribe to the channel, and leave a comment if you have any questions, and you can access our Telegram channels in a second link in the pinned comment. Let's get into it. Starting with market data, we can see Bitcoin is down 1.24% in the last 24 hours. Not a big move. A 1% drop is by no means a significant move, but what makes this move significant is the fact that we've lost this horizontal support as well as this diagonal uptrending support line. So technically, we've actually lost this uptrend. So although it's only a 1% move, this 1% move has resulted in some significant shifts in the trend and the price action. Moving on, volatility is 1.67, relatively low for a 30-day period. We are pushing these depths of volatility again. If we go to all time, we can see, volatility. We really don't see a lot of periods in instances within the last 7 years where we've been under about 1.5. We generally have been remaining above that 1.5 level. Besides, the May 2020 crash, we're looking at October 2020, and we're looking at March 19, and of course the bear market bottom in 2018. Besides then, we've remained above like 1.7, 1.6. 30-day volatility. So as we start seeing now, we're seeing a lot of big jumps ups and a lot of big jump back down in the volatility, indicating a lot of indecision in the price action. We'll get these spurs of price action, a lot of volatility comes in, a lot of plateauing, a lot of consolidation, and then these slow degradations in price action just to rinse and repeat. And that is basically what we've seen for the last 4 or 5 months now. Since about June, we've seen that occur. Volume has pumped up to about 61 million. Volume is by no means low now. We're looking at anything above 40 million. Starts to at the higher end of liquidations currently for what kind of volume we're seeing in the market. And that is attributed to the fact that we have seen quite an aggressive 4-hour candle. And of course, that 4-hour candle has taken us through a diagonal and a major horizontal support zone. Again, with those moves occurring, a lot of liquidations come through in the market, and those can be quite aggressive. We go ahead and take a look at the last 4 hours alone on this 4-hour candle. It attributes to more than 50% of the 24-hour liquidations occurred within this crash below this horizontal and diagonal level, indicating again that level was a massive area of contention and support on the chart, again indicating we've lost a major level. So let's go ahead and talk about the broader markets, and then we'll come back to Bitcoin. So the DXY has broken out that falling wedge pattern. So we're likely to start moving this way up to the upside as the DXY rises. Traditional markets will fall, cryptocurrency will fall, and again, this is kind of exaggerated what has occurred today. We've seen the DXY open green, and the traditionals and Bitcoin has fallen. So it's kind of assisted that degradation in price. If we look at the traditional markets, again, Dow Jones has not lost this major support level below us, but we are rejecting from this upper neckline resistance on the chart over here, indicating again, if this low is taken out, we will continue towards the downside. S&P 500, exactly the same thing. We are pushed towards this lower support level, bouncing, create that support resistance flip, and push towards the downside again, looking to lose this low before we confirm any move towards the downside. Again, not a lot of decision in the direction of this market yet. We are leaning towards a more bearish side as we have had a breakdown of a uptrend, a rejection of that uptrend, confirmation a new downtrend is started. How low will this downtrend go? We do have to wait and see. So it's getting interesting. The bond yields are kind of in these bullish reversal patterns. We do have a falling expanding wedge over here. It's kind of still in the midst of that. And of course, the 2-year government bond yields did have a small breakout of this ascending trend line over here, and it hasn't really sustained above that level. What we're looking for the 2 years is to sustain around 4.4%. Anything above here will result in this price of this yield to increase. And as the yield increases, The US dollar gains strength, the DXY rises, traditional markets fall, and cryptocurrency is correlated to traditional markets via the peg of US dollar to a degree of 0.7. So then we can say, due to probabilities, that Bitcoin is more likely to follow suit the traditional markets and fall if that continues. So these are really good indicators when we look at the overall market health, particularly for the strength of the US dollar, particularly for traditional markets and Bitcoin. Deciding where these yields go can be very leading in terms of where the price can go on the larger time frame. That is why we look at these in the videos. But let's go ahead and get into Bitcoin. So very straightforward today. We're going to keep today's video nice and short and sharp, straight to the point. What has happened? Well, we've broken out of a 2.5, 3 week long ascending pattern. This ascending pattern is known as a rising channel. We have confirmation of at least 3 retests on one side and 2 retests on the other. So 1, 2, 3, 4, 5. Okay, we have confirmation. For a channel to be confirmed or validated, we need at least 5 points of contest. So 5 points of retest, 2 on the resistance, 3 on the support. That is what we've seen. We've seen 2 retests on the upside of our resistance and 3 on the support to the downside, indicating that this pattern actually completed upon the bounce of this support level down at 16,700. Therefore, the next retest of this uptrend, provided a new high was not reclaimed, we would have seen a drop down. This is what we've been saying for the last few days. We've been warning everyone about this. We've been telling you we are not going to see a move towards the upside unless this local high gets reclaimed. Until then, we can expect the price to fall through this channel, as this is a bearish structure. The bearish precedent, the bearish bias is still very active on this chart. So what are we looking at right here? And excuse me, I'm coughing a little bit today. We're looking at our support levels. So it's very, very clear, very obvious we've lost this support level here. Okay, we lost that 17,000 to 19,000, 16,950 support level. We are pushing through. The next support level to lose or retest is this lower support, where we found support over here on the 9th of December. This ranges between 16,760 and 16,800. Losing that level, we do have our POC level of support, which is a very strong, a very major area of support, a very strong possible bounce point or a trend reset point. So we're looking at that level for a potential trend flip. Losing that level, we are targeting these next support levels. So we are very much in a downtrend now. We have lost this uptrending support line. Until we reclaim this, until we get over this high, we are not looking for any sort of bullish price action for the larger time frame, for the smaller time frame, for nothing. It doesn't mean we can't see bounces and little swings, okay? Little swings upwards. The trend is very much down right now until we clear this local high. So to the downside, we've just told you what we expect in the short term. On the larger time frame, what do we think Bitcoin is going to do on the larger time frame? Well, if we lose that absolute low, which was indicated by the 15,500 level, this low we've seen 2 separate bounces from. The logical target for Bitcoin is 13,900 to 12,000 level. Okay, according to the VRPV, this is a very strong support, particularly as we approach 12,000. The support gets stronger and stronger, indicated by this whole chunk of volume here. Okay, we see an immediate drop down in our VRPV, hit by a wall of volume. That wall of volume expands until 12,000, where we're hit by an absolute fortress of historical trading volume at that point. More historical trading volume, more orders, more resistance, more support. Keep it simple, keep it stupid. It's really, really obvious stuff. The more historical trading volume in a range, the more likely there are to be a lot of orders. As there are a lot of orders, whether it be support or resistance, it requires a lot more money to clear those orders. Therefore, we're likely to see reversals, consolidations, compressions, even potential bottoms. Okay, very simple stuff. So that is what we're seeing over here. What we're seeing on the larger time frame as well is another clear rejection. Look at this downward trending resistance from this macro downward trending with bear market resistance. Again, we need to get over that level. We need to smash through that level. It is no coincidence that that level is gate kept by this local high level, which we're talking about around 17,400. This 17,400-ish level, which was on this chart represented by these double dash lines, is a point we need to break through. Breaking through our point will enable a retest of 18,100 to 18,200 to 18,600, which of course is that June low. The June low is a level we absolutely need to break through to see any sort of possible trend flip The reason being, if we go ahead and look at our structure on the 1-day chart, we have a falling wedge structure, and we have our POC level sitting at 19,200 with that resistance level we just mentioned just below. So for us to see any sort of retest of this upper range that will enable a potential breakout and confirmation of this breakout of that bear market resistance, as well as a flip in the macro trend, we have to get above this June low sitting between 18,100 or 18,200 and 18,600. Okay, a lot of heavy resistance above us. The trend is definitely consolidated towards a sideways region, as we've seen with decreasing volatility and volume. And of course, as we start to see price approach major resistances, it is not very healthy or good to see the price continue upwards without heavy rejections that we're seeing here. We're seeing a heavy rejection from a very major rejection point, which is that bear market resistance, in combination with steadily rising price, decreasing volatility, decreasing volume, okay, massive news events on the horizon. Of course, the price is going to struggle to break through those resistances. So what implications can these news events have? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Well, we have our core inflation, CPI, okay, and year-on-year inflation, and we have the FOMC coming out soon. So let's take a look. The consensus for our core is 6.1. The consensus for the inflation year-on-year is 7.3. The forecast is sitting slightly above. Okay, so the forecast is sitting slightly above. And I say the forecast is sitting slightly above currently because PPI came out bad. Okay, producer price index came a little bit higher, it was 0.1% higher than expected, okay, which was consensus and forecasted. That means that obviously when we see PPI rise, there's a potential that this could be a leading indicator on what CPI is going to do. As prices rise for producers, they push those prices towards consumers, and then eventually the prices rise for consumers, and therefore that attributes towards the rises in inflation. So it generally works downwards from the top down. And now that's what we're kind of seeing. So I think the forecast is slightly higher than consensus at the moment, so I expect it to come in around that same level. If it comes in at or above forecast, I'm going to go ahead and say it's bearish. If it comes in a consensus around consensus, I'm going to go ahead and say we're going to see neutral. And if it comes in under consensus, we're going to see a very bullish reaction. Okay. Now, the reason why CPI is so important is because CPI directly tells us, it's a direct, how would I say it? It's a direct explanation or depiction, if you must, of how the inflation rate is impacting the CPI or inflation, or how these interest rates, are having an effect on inflation. So like I said before, PPI rises. If PPI rises, we're more likely to see CPI rise as producers push prices towards consumers. If CPI is rising, okay, it tells us inflation is rising. Now, interest rates are a tool to help combat inflation in efforts to bring down inflation. So if we're decreasing the aggressiveness of our hikes in interest rates month on month, okay, and then we notice that CPI is rising again, inflation's rising again, what does it tell us? It tells us that our interest rate hikes aren't big enough to combat the rising inflation, and therefore interest rate need to go back up. They need to be more aggressive once more. So if this tells us anything, it tells us that CPI is going to be massively impactful on the markets this time around. PPI was higher, therefore there's a slight bearish precedent on what CPI could be, or expectation that it could be worse than expected. If CPI comes in very bad, we already know that the increase of a probability that interest rates are going to come out bearish has skyrocketed. Okay, therefore the market will front run that based on perceived systematic risk. The perceived systematic risk will have risen and the market will fall. Okay, so CPI is a leading indicator on interest rates, just as PPI can be a leading indicator on CPI. Very interesting stuff. Okay guys, apologies, my video just cut out there, but I hope you enjoyed today's video. I hope you guys have a great rest of the day, and obviously if you have any questions, leave them down below. We'll see you guys in tomorrow's video. Cheers.